Forex Fundamentals Part 2, Forex Trading Sessions. Throughout this lesson, we will be looking at the 4 major global trading sessions, the opening and closing times, which session has the most movement and why, the best session to trade in and why, the best and worst times to trade and why. When is the best time to trade? There are a lot of people that have a lot of different answers to this particular question. All right, the Forex market is open 24 hours a day. However, that does not mean that it is always active. We need to understand the different sessions, as that will give us an indication of the best times to trade. The major global trading sessions. There are 4 major trading sessions. We have the Sydney session, or the Australian session. We have the Tokyo session, which is also referred to as the Asian session. We have London, and then we have the New York session. This is where it starts. As the day goes by, over the 24-hour period, we move into Asia, then we head to London, then to New York. Once we get to New York, we're back around to Sydney again. All right, the opening and closing times. What I've got down here is the Australian Eastern Standard Time for those that are in Australia, and then we've also got the New York Eastern Standard Time. This will fluctuate based on, or I should say change based on, daylight savings. So this is prior to daylight savings. In Australia, or in Australian Eastern Standard Time, 7 a.m. in Sydney, the Australian market opens. It runs from 7 a.m. through to 4 p.m. We then go into Tokyo from 9 a.m. through to 6 p.m. We can see it overlaps a fair bit. Roughly 2 hours into the Australian session, Asia comes online. London, 5 p.m. So we've got that 1 hour crossover between Asia and London. And then we've got New York opening at 10 p.m. All right, like I said, guys, remember, this will change based on the daylight savings. All right, so at the moment, we are running at different times. Work it out based on your daylight savings, whether you've gone back or whether you've gone forward an hour. If you have any problems with that, you can search that up online, and it'll give you an indication of the trading hours that are relevant to the time zone that you're in. For those that are in New York, for those that are in the US, this is the time that your sessions commence. So Sydney, or the Australian session, will be 5 p.m. through to 2 a.m. And then Asia coming in at 8 p.m. through to 5. London, 3 a.m. to 11. And then for you guys there in New York, 8 a.m. to 5 p.m. when you guys are wide awake. Always take note that in between each Forex trading session, there is a period where 2 sessions are open at the same time. Like I said, Sydney and Tokyo, they overlap. Tokyo and London overlap, and then London and New York overlap. These are the busiest times to trade. Why? Because there is a lot more volume when 2 markets are open at the same time. During those times, all the market participants are buying and selling, which means that more money is being transferred through the hands. Let's take a look at the average pip movement of the major currency pairs during each Forex trading session. Now, before I show you guys the table, most of us have an idea of what they believe is the busiest session. The answer that I always get from most people, especially on my group courses, is that the US session is the busiest. Let's take a quick look and see what the average pip movement is. So I put Sydney and Tokyo, or Asia and Australia, together. They overlap and they run at the same time for the majority of the day. But we can see here, these are the most commonly traded pairs, and we can see the average pip movement of those currency pairs. We can see Australia and Asia through here doesn't really give us much movement. We come into London, where we can see the majority of the action. All right, we can see here Euro US 114, 114 pips, average pip movement throughout that trading session on this particular currency pair. If we do look in comparison to the US session, it's not that much of a difference. We still have some currency pairs that trade on a very similar level. So we've got here US CAD, 96 pips, 96, 72, 71, 83, 81. Very, very close. However, overall, if we're looking at the busiest session, we would definitely be talking about London. London comes online. Once London comes online, we've got Europe, all those European countries, they come on board too. So there are a lot of different market participants, a lot of guys awake, a lot of people buying and selling at that time, and that adds to the volume and the buying and selling pressure, which we can see here. Let's break down each and every session so we can gain a more detailed understanding of what each of these sessions provides. Tokyo session, referred to as the Asian session because Tokyo is the financial capital of Asia. Japan is the third largest Forex trading center in the world. The yen is the third most traded currency, partaking in about 16.5% of all Forex transactions, and overall about 21% of all Forex transactions take place during this session. The main participants during the Tokyo session are commercial companies, exporters, central banks. Japan's economy is heavily export dependent, and with China also being a major trade player, there are a lot of transactions taking place daily. With that said, liquidity can be thin. You may be waiting for a while before anything exciting happens. I've experienced this on several occasions. You place a trade during the Australian and the Asian session, not much movement, you hold on to it for a while. One of two things occurs. Either London comes online and it moves in your favor instantly, or London comes online and the whole trend changes. My advice to you guys is probably wait for the London session to open, as anything can happen to your open position if you place that during the Australian and Asian session. On most occasions too, I've seen after big moves in the preceding New York session, you may experience consolidation during this Tokyo session. The London session. While there are several financial centres all around Europe, it is London that the market participants keep their eyes on. London has always been at the centre of trade due to its strategic location. The London market has access to Australian and Asian sessions. It's also got access to its own, obviously, Europe and the US. So strategically, geographically, it is located in the best possible place for those that want to trade Forex. About 30% of all Forex transactions happen during the London session. Due to the large number of transactions that take place, the London trading session is normally the most volatile session. Most trends begin during the London session and they continue or typically continue until the start of the New York session. Trends can reverse at the end of the London session as traders lock in their profits. So as guys from London and Europe start to take out their profits from those intraday trades or those scalps, we can start to see either trends reversing or we can start to see some consolidation where price starts to slow down. Nonetheless, the London session is the most active session, and as we progress through the next few slides, we will understand the absolute best time to trade where we're going to get the most volatility out of the market. New York session or the US session. High liquidity during the morning when there's an overlap with the European session. So what happens is London comes online, Europe comes online, and there is a moment where London and Europe cross over with the US. At that moment, this is where we experienced extreme volatility, high liquidity. A lot of people are buying and selling. What also adds to that is the fact that we've got economic reports. Data releases are being released at that time as well. And when that occurs, a lot of people are buying and selling based on those data releases. So a lot of activity, a lot of action. 85% of all trades involve the US dollar. So whenever the US releases any economic data, it has the potential to move the markets. It moves the markets for a short period of time. And me personally, I don't like to get involved when those data releases occur, because it's almost like being in a washing machine. If you want to get whipped around, then by all means go for it. Other than that, you can never tell how volatile the market would be. But when that occurs, those data releases occur, we do see an increase in extreme volatility. So just be cautious, be careful when you're trading around that time. just in case your stop loss is quite tight and then you get stopped out. Liquidity and volatility typically die down during the afternoon of that New York session. All right, so as London and Europe go offline, we're left with obviously US, Canada, and that part of the world. And then as it comes towards the end of the day over there, we start to see liquidity and volatility die down. Friday afternoon, very little movement. All right, so by the end of the day, Friday, close of business, most guys are closing their positions, taking out their profits, and they are shutting shop for the day, which adds to that very little movement, which creates very, very thin volatility and thin liquidity. What is the best session to trade? Now, based on everything that we have seen over the last few slides, I'm sure the majority of you guys already have an idea of what is the best session to trade. The Australian and Asian session, minimal movement. There is not much movement at all. Kick back, relax, pretend it doesn't even exist. It all happens at the London and the US sessions. The busiest time of the day comes when traders from the two largest financial centers, London and New York, begin that battle. We get the most movement through that time. During this period is where we can see major moves, especially when news reports from the US and Canada are released. So we eliminate the Australian and Asian session. Most of you guys on the other side of the world will be asleep anyway. For those that are in Australia, hopefully you've got something else to do, because if you do get itchy fingers and you try jump in while the Australian and Asian sessions are open, you could find yourself making some trading mistakes. Just be very cautious and be very careful. I generally wait until London comes online. Once London comes online, we can see what the major market participants are doing. We can start to understand how the markets will trend, and we can then follow suit. Once we get down to that area or that time where London crosses over with US, even more volatility and more liquidity makes for an amazing time to trade. At that moment, you could probably find yourself a couple of good positions, jump in, and that could be it for the week or for the day. The best and worst times to trade. Now, over the years, over my time with trading and my experience and my knowledge in understanding the markets, there are specific little pockets, moments, sections where trading is ideal, but also where trading isn't ideal as well. Just because the market is a 24-hour market, it does not mean that we are going to have opportunities around the clock. So let's take a quick look. Best times to trade when two sessions overlap. You've seen over the 24-hour period, multiple trading sessions overlap, but the London session, once that overlaps with the New York session or the US session, that is the busiest time. That is one of the best times to trade. And personally, I do a lot of my trading at that time. During the London session, so if you allow London to open its doors, allow the major market participants to come online, allow Europe to come online, you'll also find, based on what we saw on the previous table, the average pip movement, you will find that there are plenty of opportunities during the London session as well. During the middle of the week, so just be careful, Mondays and Fridays are not the greatest, and I'll explain that when we get to the worst times, but the middle of the week, Tuesday, Wednesday, Thursday, over my years I have found that trading only Tuesday, Wednesday, Thursday has allowed me to increase my win rates, but also have very solid returns. Tuesday, the market has found its feet. Most people that are trading have already established which way the market will go, and we start to see those trends move in those directions. Wednesday, obviously, middle of the week, a lot of buying and selling going on. We've established ourselves in terms of trend direction. It just keeps moving. Same with Thursday. They are those 3 solid days to trade. Worst days we're talking about Mondays and Fridays. All right, after the weekend. So what happens is the market shuts shop on Friday or Friday afternoon US As it closes, the market's shut. The weekend, Forex market is not open. Therefore, what happens is Monday comes online and the market needs to react to what's happened over the weekend. And we've seen a lot of different economic events and a lot of different things happen over this year, last year, and the year before, where we've seen extreme reactions to what's happened over the weekend. Gaps in the market, gap up, gap down, and that can affect your positions if you do have a position that you've held over the weekend. My suggestion here is allow Monday at least for the London and the US market to come online and react to what's happened over the weekend before making any decisions. Fridays, obviously, because people start to take out their positions, shut them down, close them, take their profits, and prepare for the weekend. So liquidity dies thin. Probably not ideal to be placing trades on a Friday, as you will be holding it over the weekend. I'm not saying that there isn't any opportunities, but just do your extra research to find out whether it is worth holding over the weekend or not, just in case. During holidays, Christmas, Easter, New Year's, bank holidays, liquidity dies thin through those times. People are obviously celebrating, banks are shut, not much movement. So just be cautious and be careful during those times, because as soon as the holidays are over, or as soon as the banks open back up and we start to get that volume back in there, you might see some trends turn around and change and potentially go against you. Major news events. When I trade, and you'll understand this when we get to the economic drivers topic, I look for the major news events to understand what is coming up. When I know what's coming up, I then generally stay out. We've got GDP, we've got unemployment figures, we've got trade balance. There's a lot of things that come out that will affect the short-term movement or value of a currency. So understanding when these major news events occur will allow you to sit back, allow the market to do what it needs to do, react as required, allow those erratic traders to buy and sell. Once it settles, then jump in and follow the trend. So this can be quite dangerous. I know a lot of guys that like to play the news. I personally don't play the news, because nowadays with a lot of retail traders on board, it can go any way. It can go up, it can go down. Data could be released in a positive for the currency, but then we start to see that traders push it the other way. So just be careful when we get to this particular data release, because it will definitely affect the value of the currency. All right, this brings us to the end of this topic. A few things to take on board. If there's anything that I can say, I want you to take on the fact that the markets have specific times where they are good to trade and where they are bad to trade. All right, so if you have to write these things down, write them down, keep them in front of you. All right, London session, great time to start trading. You can do a lot of scalping through that early few hours of the London session, and then your intraday setups as Europe and the US come on board. We've got those crossovers, the London and the US session crossover. Very, very volatile, a lot of movement, can provide a lot of trading opportunities. So keep an eye out for that. All it takes is literally a couple of good setups per day, and you'll find yourself in a very profitable situation. Understand the worst times to trade, all right? That's Asian and the Australian markets. A lot of what happens through those markets is consolidation after the preceding New York session, and we do a lot of waiting at that time. So it's probably beneficial for you to sit back, relax, wait for that period to complete, and then jump on board the London and the US session as it comes online.